Thank you for joining us at XM.com for today's market comment by Rafi Boyajian. I'm Maria Pachardis. The Bank of Japan kept its policy settings unchanged on Tuesday, wrapping up the final round of policy decisions of the year by major central banks. Despite some speculation of a policy shift in the run-up to the meeting, there were no surprises by the BoJ, with policymakers maintaining their easing bias. The bank not only disappointed those investors that had bet on some kind of a policy tweak in December, but Governor Ueda also appeared to dampen any prospect of a rate hike in January. Ueda has put the focus firmly on the spring wage negotiations, so a rate hike before April is seen as highly unlikely. However, in the absence of more explicit signals about the timing, traders hold off the yen, wiping out some of the currency's recent gains. Fears of disruptions to oil supplies pushed up oil futures on Monday, as Iran-backed Houthi rebels in Yemen stepped up their drone and missile strikes on Israel-linked vessels passing through the Red Sea. The attacks are thought to be in response to Israel's actions in Gaza. Investors had largely been ignoring the attacks, but after oil giant BP became the latest to suspend shipments through the strategic route, it briefly sparked panic about a major supply disruption. But with U.S. warships already in the region to fend off the attacks, fears of a further escalation have eased and oil prices are steadier today. The risk of higher energy prices boosting inflation lifted bond yields on Monday, but only slightly, while equity traders completely brushed off the threat. The S&P 500 closed at yet another new high for 2023, edging ever closer to its all-time high from January 2022. The Nasdaq 100 is a step ahead and finished the session at a new closing high. Fed officials have continued to push back against imminent rate cuts over the past day, but their words appeared to have fallen on deaf ears as easing bets were pared back by just a few basis points, and investors continue to expect at least 2.5 more rate cuts than the Fed does in 2024. In currency markets, the dollar was slightly weaker against a basket of currencies, despite the strong gains versus the yen, as the euro and pound bounced back on Tuesday. Thanks for watching today's market comment here at XM.com.